Alrighty, traders. Good afternoon, good morning, good evening. If you're probably wondering why my voice is the way it is, that's because I've lost my voice. Woke up in the morning and suddenly my voice is gone. But we're ready to rock and roll. We got the Fed's decision coming up in the next 15 minutes. It's going to be an interesting decision because we know that there's been some sort of conversation around a 75 basis point raise, but that's just been rumors. Right now, the forecast is 50 basis point. We're going to go ahead and double check on that. The last time I checked, it was still a 50 basis point raise. And but I say that there's rumors around talking about a 75 point basis 75 point raise. Now, 75 point basis raise just simply means that if you look at the way the markets have been moving over the last 48 hours, in fact, probably the last 72 hours, we've seen some strong move in the dollar. And that's because that 75 point basis raise or 75 basis point raise is actually been already discounted into price. We've already seen it priced in. And so if the Feds come out and they decide, now again, this is just my 2 cents about what I expect the market to do. If the market comes out and they do a 50 basis point raise, not a 75 point basis point raise, then this could mean that on a 50 basis point, the market's going to be a little bit disappointed because they priced in a 75 basis point raise. If it comes in as a 50 basis point raise, I believe we may see a strong move to the downside for the dollar. If they come in with 75 basis point raise, it's not going to be too much of a shock to the market because I think it's already been priced in. So I think we might get a little spike, a little bullish spike in the dollar, just to confirm, okay, we got it. But I still believe that we're going to see a correction move, meaning a bearish move in the dollar. So either way, whether it's a 75 or a 50 basis point raise, I still believe we're going to see a downside move in the dollar. It just matters how fast it'll be will be dependent on exactly what the basis point raise is. Now we also have, of course, the press conference coming out at 2:30, and everything will obviously be disclosed in the press conference. And a lot of questions around that would really give sort of the idea of what the Fed's already thinking about and how they're going to approach it from here onwards. But I think at the moment right now, I think that a lot of the movement's going to come out of the actual rate decision, and then the confirmation will come in the press conference. So let's go take a quick look at the charts, because what I'd like to do is I'd like to go ahead and share with you a little bit about what the technicals are doing so that we can get a sort of an idea on whether or not the markets, news, and technicals are falling in line. All right, so let's go ahead and do that. So here is the, you see right here, here's the, and I'm going to go ahead and refresh this. And at the moment right now, if I go to the Fed decision, 50 basis point is still on the cards. Okay. Now let's take a look at the actual chart. And I'm going to go to dollar first. Let's go to dollar index. And I want you to go ahead and show you a little bit of something right here on the dollar that's going to give you sort of a better understanding of what's going on in the market right now and how we can connect the dots. So if I take a look over here on the current chart that we have right now, what I'm seeing is on the dollar index daily time frame, I'm seeing that we have a wave 1, 2, and then we have this inside wave structure. Now what's important is if price goes below this level right here, which is at 12,853, we're going to see price dropping back down to the low here, which, by the way, is our inside fourth wave right here. So we're probably going to see what we call an irregular flat. All right. And the irregular flat will just simply mean that the market is trying to work itself back deeper inside before it starts working back up again. All right. Now, like I said, it all depends on what the news is. Will be dependent on whether or not we have a strong move to the downside or we have a slow move to the downside. But either way, whether it's a 50 or a 75, my charts tell me that we can expect a possible downside move. I'm also seeing here that we have a possible negative divergence, which means a bearish divergence on the dollar index as well. Now, I'm not going to just take this chart. I'm going to look at other charts as well. Now, I just want to say this, just so we are clear. I'm not discounting the fact that we may not see a rally in the dollar. Okay, I just feel that if we do see a rally in the dollar, the rally in the dollar is going to be short-lived, and then we'll see a downside move. So I still believe that in this week, heading into Friday, we'll already start seeing a bearish trend on the lower time frames taking place, which confirms that we're seeing turning points on the larger time frames. So it's going to be real interesting to see how today plays out. And I think as we go into Thursday and Friday, I think it's going to be critical that we go ahead and pay attention to the lower time frame trends to identify the actual trend that's going to take place, at least in the short term, midterm. Now, Adam, good day, my friend. Now, let's take a look at Euro US dollar. I want to show you confirmation here. Here is a chart here on the Euro US dollar daily time frame. The same things happen right here. We've got a wave 1, 2, got an inside structure right here. And now we're right here at the support level. So it's not quite broken through that support, but we are at the support right here. So again, price can break below it and come back up and trade back up and go higher. So this is a gain. This is a fourth wave high. And so we're inside a fourth wave. The fourth waves are the most complicated waves to trade. That's where a lot of traders end up losing a lot of profits, okay? Because they get caught up in the fourth wave and they're not really sure where the markets are going, and they try and trade the support and resistance levels, but they're not seeing success in it. So we could definitely see that price is going to be at a level of support here on the Euro US dollar, which, by the way, if you're a supporter and resistance trader like I am, we'd be buying at the support level, all right? If there was no news coming out right now, I would probably be thinking that if I see any signals, any buy signals at the bottom of that level there, I would be going ahead and buying. So let's take a look at signals, all right? If we were looking at a signal, I would be going ahead and saying, let me go to my this is a 1 hour. I'm actually going to go to a lower time frame. I mean a higher time frame, 4 hour. And I'm going to go to the 4 hour right here. So here's a 4 hour time frame set up right here. Now what's important to show right here is that we have a wave structure that took place right here. Okay? But in the 4 hour, notice that in this structure right here, we did not get any blue candles, all right? When you see red, it means sell. When you see blue, it means buy. Right now on the 4 hour, no buying indication right here in the 4 hour. If I go down to the 1 hour time frame, on the 1 hour time frame, we had some short-term buying. Here's a short-term buy right here. Here is another short-term buy right here as it comes back to retest that high. In fact, a lot of students that follow me in the Volt Wave Trader trading system, they will know that this is a 25% of the ATR profit level, taking on some short profits on this area right here. We call this the leg one trade. And then we've got the turning point, 0.3 turning point trade, which is taking profit to that level, right, from this entry, taking profit there, and then moving your stops to break even and let the rest ride towards the 1.618, which is all the way up here at the top. Okay, now, if we take a look over here, the market did pull back. So if we did move our stop to break even right here, then traders would be out at break even. Now, that's if you apply stop losses and keep your stop losses tight between the highs and lows of that market. But if you, oh, by the way, sorry, I just realized that I was hiding the screen a little bit here. There you go. All right, this is better. So yeah, you can see right here that this area right here was a profit area right here. Here's the second area where it was profit taking. Stop losses would have been moved as the market comes back up to the high. Stop loss has been placed at break even right here. And so the market comes back and takes you out. Now, again, that's if you're using stop losses, right? if you're using what we call cost averaging, then you're basically getting in and out of the market. And as an example here, if I take a look over here, I'm in on the, what is this one? The Euro US dollar right here. And I've got multiple positions in, and they are buy positions right now. So I'm buying, and I'm looking for, on a 5-minute time frame, I'm looking for these 0.1, 0.2. So we're looking for 1, 2, 3 patterns. And then we're going to go ahead and trade above the 0.2. So I'm already setting up 1, 2, 3s, 1, 2, 3s on the lower time frame, and I am bullish on the Euro US dollar. Now let's go back to the chart right here. This is the Euro US dollar. Let's take a look and see if we've seen the same thing, and we've got about 3 minutes left before the news comes out. Here's the US dollar CAD. US dollar CAD has gone. If I go ahead and compress the charts and go to a 4-hour, you'll see here that we're range bound on the 4-hour. Prices come up to the top of the range right here. We have a very big impulsive move, and now we're expecting price to start falling back down south. So all of this right now is actually telling us that we should start looking for a sell-off to the downside. Let me go to the 1 hour. So you've got early signals. The 1 hour is really giving us in some multiple areas right here. Here's an area to sell. Here's an area to sell. And now we're waiting for the next area. So if we're using cost averaging, we're basically cost averaging right now at this resistance. This is the area right here that if the market stays below, we want to cost average in this position. Now we've got about 2 minutes left, and the news is going to decide our fate here on this trade, and we'll see how it plays out. But again, traders, watch out for spreads, watch out for volatility spiking, and of course, if it's going to break out to the upside, I'll be very cautious on a breakout to the upside. Very cautious. I'll be more inclined to want to pay attention to some downside action, downside swings, because that's where I'm seeing that all the technicals are leaning at the moment right now. And if I'm wrong, which is the possibility, if I'm wrong, then what I'll do is I'll wait for the next level of resistance that price is going to get to before I start getting back in on that trade. So we'll talk about that. If price breaks up to the upside, we'll definitely talk about what is the upside potential. Where could we go to the next? What is the next level that we could see? And I'm looking over here at the US dollar CAD, and at the moment right now, I'm seeing resistance right here, where price is at right now, and the next level of resistance will be here around about 134. Sorry, my bad, 131.76. Which meets up with this trend line as well. So we'll probably see 131.76, 132. That become the next level of resistance. And we're currently trading at, right now, at 129.60. I think if we can get a spike today and the market goes and heads south, the spike to the upside may test that 130 level, which is a psychological level as well of resistance. So there's a very good chance that could be the quick spike up if the market's going to spike and come back down again. So again, the news is out. Let's take a look. All right. Firstly, number one, let's see here. See a little bit of move. I'm going to move this down to I'm going to go down to as low as a 15-year. There was that initial spike. So this is the 15 right here, but hold on. That's not when the news has come out. Let me go 5 minutes. So here's the 5 minute. Spike up to the upside. Now we're pushing down. So a little spike to the upside. Wasn't big. Wasn't big at all. Let's take a look over here. I'm going to go to the news. Take a look at the news. The news currently right now reported. It reported a 75. So it did go 75. All right, and with a 75 per basis, so they did raise 75, which means that basically everything that's happened over the last few days has been what? Already priced in. So the rumors are true. They were expecting to raise a 50 basis point. They came in with 75. The market actually heard the rumor, priced it into the market, and now we're seeing the reaction in the market right now. So right now, This is when I think we're going to get a little choppiness, right? But I think it's going to come down to the press conference now. Now it's going to be down to the press conference. I don't believe that we're going to see any rally off that news because normally you would see it. The reason why we're not going to see it because it's been priced in and the market's looking for correction. So the thing here is, again, that's so important, is inflation. The Feds are raising the rates. They're going aggressive. They're going at 75 basis point. The market really priced it in, right? But has it changed anything with inflation yet? No. Inflation continues to rally. So which means that the Feds are losing a lot more, or the people are losing a lot more faith in the Feds as to whether or not they can control the inflation. All right. I think it's going to come down to US oil, or at least oil prices. Oil prices is what's going to control inflation. Raising the rates with the higher oil prices rising isn't the answer, right? But if we can get the oil prices to start subsiding, that'll help. That if the Feds do come with interest rate hikes, that will help then control the inflation better. But oil prices right now I think is key. But traders, even with that news at 75 basis, I believe that we're still going to see a corrective move in US dollar CAD. And so as we continue to monitor this, I'm going to go to the 1 hour time frame now. Monitor this. I'm actually going to go to another time frame right here on this chart and take a look right here. We're getting a lot of sellers in the market right here. There are a lot of sellers in the market right here. And at the moment right now, this is what's happening. Market's going to be choppy. It's going to be choppy. I almost going to say this. No, not almost. I am going to say this. That I'm so confident that we're not going to see a rally, that I've already gone ahead and been bearish. I'm bearish on US dollar CAD. I'm actually bullish on Euro US dollar. And I actually want to go ahead and take a look here at my positions. Haven't changed at all. Positions haven't changed at all. It's still where it is before the news. So no big changes at all. We also mentioned that 130 level. I see 29.79 is where price is at right now. So there's a good chance that we may get that 130 level tested. And the reason why I brought up 130 is because I pulled up this 1 hour time frame right here. And I noticed that we had a very aggressive wave structure of a year. And so this right here is where I'm anticipating that resistance to be at. So we're at now 29.87. And this is not a fundamental rally that we're seeing at the moment right now. This, from around about the 8th of June, this is fundamental rally. This is price, or at least the market, accepting that the 75 basis point is going to come into play, and that the rumors are exactly what they do. Buy the rumors, sell it. Right, you got it. So right now, price goes up. What did it go up to? See the price. 129.89. So it's trying to test that level there at 129. I think that's 91. Yeah, 129.91. So we came pretty close there. Again, don't think the news is enough to get us through this, and that the market is demanding a retracement move. So there it is. Play there. Now let's see how it affected the JPY crosses, because there is an indirect effect when the US does raise, that we see this in the JPY crosses. I'm going to go to Swiss JPY. And Swiss JPY, a little bit of a pump. Not much there. Again, is the market losing faith in the Feds to whether or not they can actually control the inflation at the moment right now? And the answer to that is absolutely, I don't believe they can. All right. Now, let's take a look and see. Let's go to Euro JPY. No big jumps on the Euro JPY right here. Let's go to Pound JPY. Pound JPY, also nothing really big on that. Let's go to US dollar JPY, because this is the big one right here. The US dollar JPY is where we're looking for price to come back down south. And let me explain what's happening on US dollar JPY right here. Take a look here. And you've probably seen, or at least looking at these patterns across the board, because this is happening on not just the US dollar JPY, this is actually happening across the board. Take a look right here. Here we have wave 1, 2, 3 up here, 4 down here. Now this fourth wave, right? This fourth wave that you're seeing at the moment right now is really just a shallow retracement. It's a very shallow retracement, okay? And so with the shallow retracement, we have to realize that price can come back down into a deeper retracement. And if it comes down into a deeper retracement, guess what? The market's going to take out those lows. All right? We're going to see the market take out those lows. And those lows are right there at around about 126. 126. So keep that in mind, that if we keep monitoring where price is at the moment right now, and price comes back below that last major low, then there's a good chance that we could see that the market could do this. It can go back below this level right here, come back to retest it, and that's around about 131, and then start heading back down to take out that low and coming back to a support level here, maybe even going down to a 382 bounce at around about 120, and then start working its way back up. So even US dollar JPY right now is showing that we may expect a much deeper correction move before the rally continues. And we could go down as far as 124 and 120 before we start seeing any sort of upside move in the market. And that pretty much is what it is. I mean, there's nothing more, nothing less that can be said about that other than exactly what we're seeing right now. Now, traders, I'm having a little bit of a difficulty here with my camera. So I'm going to have to, let me see if I could just change my camera out here. But yeah, I'm having some difficulty with my camera here, so I can't even. Oh, there we go. All right, got my camera back up again. So anyway, so that is where we're at right now with regards to the US dollar traded against the JPY. So again, looking for a downside move, and I think the critical level right now would be if we can break below this high right here, which said, like I said, 131 right here. So 131 now 131 is about 300 pips away from where it's trading right now. So that means, traders, that there's still good sell opportunities down here towards here. We've got about 300 pip opportunity here. Then we should start thinking about taking profit, wait for the market to break through there, and then go ahead and start chasing after the next move. And that's going to be about a 600 pip opportunity going south right here. So all in all, you're looking at around about a 900 pip opportunity that could be captured in sections, all right, as the market starts trending down, because we are going to see the market trend down. Let's go back to the market again here. All right, so here's the US dollar JPY. As again, you can see not a lot of action in the market, but here's an opportunity that you might want to take a look at right now. All right, so let's take a look at an opportunity right now. If we're going to look at trading US dollar JPY bearish, considering that we're going to see some money flow from Swiss to JPY, JPY is going to get stronger, and then we're going to look for the possibilities of the US dollar weakening, and so therefore US dollar JPY bearish sell-off. Let's take a look at what you're looking for right here. Let's put in some fibs, and I'm going to take a fib from the high right here down to the bottom right here. And traders, I'm going to call this a 1, 2, 3. That's really what it is. I'm looking for a 1, 2, 3 pattern. So I've already had price working its way back down from here to this level right here. So this was the first leg opportunity. Now we're seeing an irregular flat. Look at that. This is a 1 hour time frame. But look at this. Price goes and creates a high up here. Then it goes down, doesn't take out the low. Oh, sorry, takes out the low, but pops back in. And then ends up taking out the high. At this point right here, this is where traders should be looking to sell. Now, if you're looking for a proper confirmation, then you might want to, because the market's going to move quite a bit here, you might want to bounce down to 15. Let's take the same swing here on the 15 and go look for an opportunity. Now, excuse me. If it gets messy, and trust me, things can get messy. If it gets messy, then maybe just staying aside and not doing anything might be the way to go. But if it does what you expecting it to do, then follow through with the trading plan, right? So something like this. If you take a look at these 618 pounds, 618 pounds is a very common area where the market could go ahead and move to when it creates this irregular flat, because normally when it goes to a 382 pounds, the 50618 becomes very important. And so we've already hit the 50, so around about this level would be where I'm expecting the market go ahead and move to. And so if I'm going to expect that, what I'm going to do is this. I'm going to go ahead and look for an opportunity right here. And I'm going to go right up to the 786. And I'm going to say that this is going to be my sell zone right here. Okay. So if the market moves, and I'm going to mark it off right here. And I'm going to mark it in here, sell zone. Now, ideally, I would like to have price coming to this area and then close out with a bearish red candle. That'll give me the confirmation to want to go ahead and get in there. Right now, as you can see right here, it's telling me that we're going to see some short-term rallies. So this is the 15-minute time frame. So the buyers are getting in the market right here, and we're going to push the market back up. Now, this is a short-term. I mean, if you look at this, this is telling me that there's a short-term. So right now, we could take, if this candle closes out in the next minute, we could go in with a buy, allow it to rally up here to the 618 pounds. Then in this area right here, we'll be keeping an eye on whether the market closes out with something bearish, because we're expecting price to then sell off back down south right here. So it'll be done something like this. Now, you'd have to keep your stops tight. I think the majority of the noise is gone. We might have the press conference at 2:30 that could cause some more volatility. But if you're looking at taking some action right here, then this is what you would do. Let's take a look and see the room, how much room we have here. Well, that's about 50 pips. So if you're looking for a 20 pip grab, 25 pips, you certainly should get that. You got about 50 pips in the making right here. So there we go. Boom. So we've got a closed candle right here. So this would mean that we're going to go ahead and enter the market, place an order. Okay, place an order, buy, get in on this one right here. And yeah, we can go ahead and let's put stop losses. Okay, throw stop losses in here. Let's just go ahead and throw stop losses about 25 pips apart. And we're looking for a 50 pip target. Let's go throw that in. All right, so there's a stop loss right here. So what I do want to do is I want to move my stop loss a little further away right here, just so that it's below the low right here. So I'm going to place it there about 114.25. Okay, 114.25. Now, again, keeping in mind that I believe that the US dollar JPY is going to go bearish, right? It's going to go bearish. But what I want to do here is I want to see if I can take some short-term profits going long. If it goes below here, I'm going to get stopped out, and then we'll look for the next opportunity. But if it does rally up to the sell zone that I'm seeing right here, this is where I want to go ahead and capture my profits. So I'm looking for about another 50 pip rally and then a sell-off on the US dollar JPY. And all this is, my friends, is just what I'm seeing here on the 1 hour Look at the 1 hour. The 1 hour is bearish. All right, the 1 hour is bearish. So all I'm looking for on the 1 hour is a 1, 2, 3 in the form of an irregular flat, and then sell it right here on the next signal. So when I go ahead and take profit over here on the 15-minute time frame, I would want to go ahead and look at go ahead and take a look at the hourly, and if I can get the hourly to go ahead and move from showing me bullish candle to bearish candle right here, this will give me my 1, 2, 3 setup right here, and looking for that sell off back down south. This is a counter scalp trade, and if traders are like, hey, big dog, I'm not into that counter trading, then stay on the sideline. But if you trade both ways, I trade both ways, then that's what it'll be looking like right here. Okay, keeping the stops pretty tight and see how that plays out. All right, and that's pretty much it. I don't see. Let's go back to US dollar CAD right here. Look at that. There's that rally. Remember we said it's going to go. Let's see what the high was at there. The high was at, whoa, look at that, 29.93, right? It's uncanny how 29.83 comes into play. Let me see here on the 15. Remember we spoke about on the 15 right here? There it is. 29.91 was that level. 29.91, price came right up to that level there right here. And so it should be selling off. Now I will be looking at this and putting in a trade on this to go short. Why? Look over here. We got a red down below, which means sellers are getting in the market. And what I'm looking for right here is a bearish candle. So I have to wait probably around about 3 o'clock before I can enter on this trade. And I can get ready on that. So at 3 o'clock, if I've got a bearish candle closed out, it means it's time to go ahead and start selling this. So I'll be keeping this on the 1 hour. Now, if I want to go to a 15-minute time frame, then I have to wait. I could use the 15. In fact, look over here. We've got sellers in the market. So we could use, the 15 minutes to get in on this as well. I don't see a lot of good confirmation here. I always like to see something happening during this period right here, when we get these bearish bars down below in the power corner. So right now we're not getting on the 15-minute time frame. So I might have to wait for the 3 o'clock candle to get the proper confirmation I'm looking for. But it's doing exactly what we anticipated. Price is moving up, comes back to retest that level. We saw a little spike there. I said I'll be very cautious on the moves going long. Took on a scalp on the US dollar JPY. If that doesn't playing out, we're certainly going to be long bearish on that. So we'll take a look and see how that plays out. But US dollar JPY, if it doesn't hold right here, doesn't go up to that level, then if it breaks through this level, we're heading a lot further down south. So we've got bigger opportunities to the downside. So we'll keep an eye on that as well on the US dollar JPY. It looks like we're going to get a little bit of a push. Looks like it's going to come back into that zone. Oh, actually, you know what? When I look over here on the 15-minute time frame, I'm seeing something a little different set up. Yeah. See, on the US dollar JPY, I'm seeing wave 1. Oh, okay. Now, this is interesting, traders, because this I didn't see before. Okay? Look at this right here. We said that we're going to see a little bit of a push, right? But as you take a look over here, notice that we've got this wave 1. Notice that the bodies are here. I'm going to go ahead and mark off the bodies. And notice how price comes right here to the bodies of that wave 1. Right there. So I'm going to be telling you right now, with that spike here, I'm less confident on the upside rally than I am on the fact that the market's going to move down south. But I'm going to keep this in. Let's see what happens. And if it goes back above this level right here, I'm going to start moving my stops to break even right here. And that price is priced at around about 134.80. So 134.80, if we get into 134.80, moving stops to break even. Let's see if we get up a little higher. If not, might be time to go ahead and get the heck out of Dodge. Let's see where I picked up that trade. Yeah. Let's see how this plays out. Let's see how this plays out. But overall, still expecting the market to go ahead and move bearish right here. Look at this daily right here. Nice little bearish candle so far. It's not closed out yet. It's going to close out. When it does, it closes out with a bearish engulfing right here. We should be heading back down to that 131 level. A break of that should get us down here about 127. And lower than that, 124.65 will be the next level. We've seen divergence, negative divergence on the US dollar JPY. A lot of reasons why we should go ahead and sell this one. Take a look here. This is US dollar. Oh, pound. Oh, look at pound US dollar. Here's another confirmation that the dollar is going to get weak. Pound's finding support right here. Pounds. All right. So pound US dollar, support, support, support. We've been inside this range since when? 2016, right here. June 2016. Are you kidding me? Market goes up, comes back down. Year it was 2020. This is April 2020. Market goes up, comes down. Now we're in 22. Notice the time. All right. This is around about June. This is April. And yeah, this is July. You're finding the same support right here about mid part of the year. Okay. And so we should be expecting rally. And if we're expecting rally, that means dollar weakness. Again, should be expecting a sell-off in the dollar. I don't believe the dollar is going to be staying too strong for too long. All right. Cannot be strong for too long. Let's go back to the dollar index and we'll close off on this. And let's go to the right here on the. I want to go to the. I'm going to go to the 4-hour time frame. All right, so this is it, traders. Already you can see that the long-term traders right now. You see the bar down below. It's called the power corner. Bearish at the moment right now, which means that there are more sellers starting to get into the market than there are buyers. And we haven't seen our first bearish candle yet. And as soon as we do, it's going to mean that it's the end of the rally on the dollar. All right. So again, very, very much watching the market's movement. This is a 4-hour chart. So around about 5 o'clock Eastern Standard Time, we'll get the confirmation of whether or not it's a good trade or not. All right. All right, traders. Well, with that being said, hopefully you guys picked up something from this. And go ahead and smash that like button. Go ahead and smash the like button on the wherever channel you're busy viewing this on. And if you haven't subscribed to my channel, go ahead and check out FxBigDog YouTube channel as we go ahead and broadcast a lot of good stuff there on the channel as well. With that being said, this is FxBigDog signing off.